Hello everyone, welcome to Using Chaikin to help find ideas, manage portfolios, and tame big data. I'm Dan O'Connor, webinar organizer. Our presenter today is Davis Gaines, president of Chaikin Analytics. The presentation will be followed by a brief Q&A session, and any questions not answered will be addressed via email. Now I'm going to turn the program over to Davis.
Thanks very much, Dan, and welcome to those of you who are joining us after the close today. As we said, I'm going to talk you through Chaikin Analytics and how we believe it can help you in a number of areas, most importantly, picking winners and avoiding losers, but also as a tool to help you get through the massive amounts of data thrown at you each day as you go to work. I'm going to give you a quick PowerPoint. I just want to go through a few slides and kind of set some context and position Chaikin Analytics relative to other products you might use and other research you might look at. Essentially, it's an investment research product that analyzes more than 5,000 U.S. equities and ETFs, and it's based on a powerful quantitative model we call the Chaikin Power Gauge. A suite of technical analytics are also offered on the screen, and they're complementary to the Power Gauge, as are a number of technical signals. So that's about picking stocks, in addition to simply individual equity analysis and doing group analysis, which allows you to go both top-down and bottom-up. We also offer significant portfolio and list-based functionality that allows for easy sifting through those industry groups, multiple portfolios, and importantly, instantly highlights stocks you might care about. If you're an advisor or a wealth manager, we also have quite a few practice management capabilities to enhance your ability to find new clients, deal with your current clients, and also, on the edge, some things that are nice for compliance purposes. The value prop at the end of the day is helping you increase your portfolio performance. It's really that simple. We offer research, and our research either can help you pick better stocks and or get out of names you don't want to be in or avoid them in the first place, or not. If we do, we think we can help you increase performance, and if not, it's a pretty system that's not going to do you any good. So your question as we go through this is really trying to figure out how can it help me, and is it viable for the way I work and what I do. Importantly, if you talk to clients who use Chaikin Analytics today, they'll tell you it saves them a lot of time. 5,000 stocks in our universe, over 6,000 or 7,000 stocks today on U.S. equity exchanges, an awful lot of names to go through, an awful lot of information getting thrown at you at all times. We try to help you, quote unquote, tame big data. How do you cull through all that and surface those names you most care about? And importantly, within your own names that you're looking at, how do you find the ones that you don't want to be in anymore or you want to avoid if you're considering them? Importantly, we help you surface new ideas. A number of methodologies, again, both from a bottom-up perspective and top-down, to help you go through substantive lists, surfacing those ideas that might be the best ones in your list, or just looking at individual stocks that we recommend through some lists that we curate. We make it easy for you to stay on top of multiple lists and portfolios. And importantly, we have alert functionality. So if you're watching numbers of portfolios or numbers of analyst lists, or if you're covering accounts and you have a lot of accounts, you're trying to stay on top of their portfolios, we make it easy for you to see what's going on with respect to individual names in those portfolios that you might care about, and importantly, you might want to take action on or talk to your clients about. And finally, as a tool, it helps you communicate better with those you deal with on a regular basis, whatever your role on Wall Street. Now, as I said earlier, our quantitative model is called the Chaikin Power Gauge. The Power Gauge is simply a quant model, and like other quant models, we have our own special sauce, and I'm going to give you a quick look now, and we'll do a little deeper dive in a few minutes. But essentially, there are 20 factors in the model separated into 4 components: financial metrics, which are 35% of the model; earnings performance or growth factors, 20% of the model; price volume activity or technicals, which are 15% of the model; and our particular secret sauce, what we call expert opinions. Things like short interest, insider activity, and qualitative analyst opinions that typically wouldn't be in the model. All of our data for the model comes from S&P CompuStat. The model is updated nightly, and the rankings are put on the stocks nightly. So this is essentially what we show you. Every stock is ranked between very bullish, neutral, bearish, and very bearish. So 5 buckets that every name is put into. The product is all about relative performance. So we're not telling you this company is going to go from wherever it is up. What we're telling you is it will outperform the market. And when we look at the market and we look at a benchmark, we're looking at the Russell 3000. So we are looking at a very broad market, trying to capture, obviously, with the Russell 3000, almost, I think, 98% these days of the U.S. equity market cap. And then for each of these components, as you'll see, we give you a quick view on whether or not that particular component is rated in the green, or very bullish, or in the red, very bearish. The idea of the product is to be quick and easy to get information from, very visual, which is something that Mark Chaikin, in his previous life building other products for Wall Street, has always made it his practice to do, and quite frankly, what gave him a lot of success with earlier products. Now, as with any model, you care about performance. How does the model work? How is it done? On the left side, we show you the test period. Every model that's built will have an initial back test. Mark built this model during the year 2010. He was done by the end of 2010. So what we're looking at here is the back-tested performance as the model was completed, pure paper portfolio. And like any model, when a company is showing you a paper portfolio as they build it, it looks terrific. And it should look terrific because that data that the model was built on is the same data that this test is recognizing. So in effect, we have our 5 buckets: very bullish, bullish, neutral, bearish, and very bearish. We have that stair step you look for when you're looking at a model. The Russell 3000 during this time period of 2000 through 2010 was up 2.5%. Our very bullish names were up 22.5%. Our bullish names up 12%. Our neutral names performed 6%. Bearish at 2%, and very bearish 3% under. The reality is here. The model finished in 2010. This is from 2011 forward. So that's 11, 12, 13 in the first quarter of 14. The way we construct our performance is very simple. Every 4 weeks, we balanced our entire universe. The very bullish stocks go in their bucket, the bullish in their bucket, and so on down the line. And we simply track the performance of each bucket over time. So during this time period, the Russell 3000 is up 15%. Our very bullish names beat it by almost 500 basis points at 20.7. Then our bullish at 16%, our neutral at 14%. And importantly, both the bearish and very bearish buckets underperformed by 400 basis points plus. And again, that's a really important part, we think, of our research and our work, is the ability to pick those names you don't want to be in, or to help you get them out of your portfolio if you own them, or simply from a timing perspective, when you get out of them. Now, just as another stake in the ground for credibility's sake, I would mention we recently came out with some joint indices with NASDAQ. NASDAQ was looking to create some quote-unquote smart beta products, and they teamed up with us to create 3 indices. They already had a NASDAQ large cap, a NASDAQ small cap, and a NASDAQ dividend achievers index. We overlaid our model on top of each of those indices and created the NASDAQ Chaikin large cap, small cap, and dividend achievers. Those were just launched in April. And again, I just mention them because I think, as you would be aware, NASDAQ, given who they are and what they represent, did an awful lot of vetting of our performance, of our model, and our capabilities before they're willing to put their name on our name. And in fact, if you go to their website every Monday, there's a research report on a stock of the week by Mark Chaikin that they're putting up for their clientele. We also have some basic analytics in the product. This is not a portfolio management product. It doesn't do performance attribution. Again, what we're trying to do is help you figure out, what do you want to have in your portfolio, what do you want to own, and what do you possibly want to get out of. We call this the Chaikin Power Grid, and it lays out on a grid weak to strong stocks, weak to strong groups, and plots your portfolio in that grid. So by definition, the names in this bottom left-hand corner, weak stocks by our model, in weak groups also by our model, are names that would raise a red flag. As with any other research or quantitative product, you might ignore it. You might have your own work on that stock that makes you comfortable with it. But again, the idea is it's very quick quick and easy to run this on any list you have or any list you want to import and quickly surface strength or weakness in a particular portfolio. And again, group work is an important part of how we look at the market. And I think the sentence I like to use with respect to group work is simply, if you're buying strong stocks in strong groups, you have the wind at your back, and you have a greater likelihood to perform well over time. So if you think about what am I actually going to do with a product like this, I think number one and most importantly, everybody on the call right now, you have a methodology you currently use. This is an overlay for your methodology, a check. It might give you conviction, or it might raise that red flag that makes you want to question what you're looking at. It's another input to your ideas. I like to say, and you'll get what I mean when we go through the model in detail, that essentially this model is really about, here's what Wall Street thinks. Because what we're looking at are the very specific fundamental factors, the very specific growth factors, and others like short interest and insider buying that the biggest players on Wall Street look at. And we're looking at the analysts who drive a lot of stock price movement look at. Mark's whole idea when he built the model was not to find the next great American company. It was to build a model that showed here is a stock that is going to underperform or overperform in the near term to midterm, 1 to 6 months out in general. So in effect, it's a reflection of what Wall Street is doing and thinking. To a great extent, the product can help you with idea generation. And importantly, if you look at a lot of names that you're not familiar with on a regular basis, it helps you become knowledgeable on any stock very quickly by diving into the model and diving into the analytics, and doing so in the way we display data. And finally, we're going to look today at what we would call our workstation product, available on any browser. You can also take Chaikin Analytics on your iPad, and all you need is an internet connection. And you can sign in anywhere on anyone's PC, on anyone's Mac. So essentially, you always have Chaikin Analytics with you when you're out of the office. A very powerful workstation to have while you're out of the office. All right, so let's take a look at the product itself. One way to think about it is simply every stock has a page on Chaikin Analytics. We're looking at Cisco right now. And we give you a little bit of price information. Our prices are 20-minute delayed. Virtually all of our clients, probably every one of our clients, has real-time data, so that is an exchange fee we didn't think our clients needed. And essentially, again, this is not an intraday or day trading product. This is an investing or a short to mid near-term investing product. Underneath the name of the company is its group, and if you've never seen the company before, clicking on the little information button gives you a quick blurb about that company. We have our ranking right next to the name. It's very bullish, and we give you a quick look at, again, our view. Everything is through the lens of Chaikin, our view of the technicals and the particular industry group. In this case, they're both strong. Clicking that button will bring up the Chaikin Power Gauge. And as we saw, very unique about our model is we don't just give you the grade. Most models give you the A, B, C, D, E, F. They give you a number ranking. We're giving you a little softer ranking down into the model, where you can actually see which factors we're looking at and how those factors rank. Now, importantly, and particularly for these financial factors, we do the best we can to compare apples to apples. So when you look at long-term debt to equity, that ratio, different industry groups have a different expectation for what it ought to be. The Boeings of the world, for example, are going to have much more debt than a software company or a financial services company. So it's not perfect, it never is, but as best we can, we compare apples to apples, and we rank each factor on that basis. So we can see the financials for Cisco show long-term debt equity and price to book are pretty much right at the industry average. Return on equity and free cash flow are better, and price to sales a little weaker. Overall, it's a little bit better than average. Those are the traditional Graham and Dodd factors, again, 35% of the model, what most investors look at least to some extent. Earnings are the growth factors. Earnings growth, surprises, where they've been if they've had them, the trend of earnings, projected PE, and earnings consistency. And again, in this case, all a little better than average up into the green. That's 20% of the model. The technicals are only 15% of the model. And I would just make the comment, when you look at this product, when you look at the screen, it looks like a technical product. It's not. 85% of this model is either fundamental or a unique set of data that might not have a label to put on it, but is definitely not technical. So technicals are an important part of the overall work, but the model itself, which those rankings are based on, and that's all they're based on in terms of our performance, is 85% not technical. And again, the interesting, in 30% of our model, the interesting factors are here. Now, when Mark did his work, he found that, and it's obvious in retrospect, one of the biggest movers of stock prices are estimates. Which way are they going? And anytime an analyst comes out, or a number of analysts come out and up or take down their current consensus, their estimate, and it affects the consensus, that is a huge driver of stock price. And in Cisco's case, it's been very positive. Short interest. While a trader might look at short interest and say, well, a lot of short interest is bullish because they've got a cover, this is from an investment perspective and basically says short sellers on Wall Street are pretty darn smart. They're usually right, even if they're often early. And if there's a big short position, we consider that a big red flag. And if there's a very small short position, as there is in Cisco, we consider that a very positive sign. Insider activity is similar. We're looking at net insider buying. So in this case, for example, there is not a lot of net insider buying. There are lots of good reasons why people sell stocks. So personally, I don't take this factor as a big negative when it's down here, but I do take it as a big positive when it's up here. Analyst ratings refer to qualitative analyst ratings. When an analyst moves from sell to neutral, or hold or neutral to buy, we're actually calculating those and counting them, and in this case, analysts have been moving up the scale, getting more and more positive on Cisco. And finally, we're looking at the industry's relative strength ranking, how that industry is doing as a whole. And again, together, all of those factors make up these four components, which make up the rating, which to a great extent is at the core of our work. We also give you some basic fundamental data if you're curious and want to stay on our product, but this is all very generic fundamental data that you can get anywhere. Basic price, earnings, and history data. Below the power gauge is, again, what looks like a lot of technical analytics, and there's a few key technical analytics. The traditional price chart, upper, middle, lower bands, and a 200-day moving average, and three key technical factors that Mark chose to include in the product. Chaikin money flow, the technical factor he made his name on 30 years ago. Relative strength, and when we show relative strength on the stock page, it's always against the SPY, S&P 500. And third, an overbought, oversold indicator to give you an idea where a stock is in its current trading range and to help pick entry and exit points. Now, the bottom line is probably the most important line. If you think this is an interesting product and research and you think you might want to buy it, this is what you want to look at. This is the historical power gauge rating. Green is a bullish or very bullish rating. Yellow was a neutral rating. So in essence, you can backtest every single stock in your portfolio and see how Chaikin would have done for you. So for example, if I click on this chart, I can see that Cisco, which was neutral for most of the past year, started to get bullish here in March and April. And then on, let's see what day that was, on April 10th, it went very bullish. And on April 10th, it went very bullish at a price that closed at $22.65. And when you start looking at stocks on Chaikin, if you do that exercise, you go click in the chart and take a look at when our power gauge changed. And then secondly, take a look at these two key analytics that we focus on. In particular, looking for persistent relative strength. What you'll often find is that the power gauge changed, and not too long after, the stock price also changed in that direction. Now, I have all day, every day to cherry pick names, and I think any product you look at, there's always that possibility. So I think what's really important is you go through your own portfolio, look at what you did well with last year, look at what you did poorly with last year, and ask yourself the question, if I had had Chaikin and I had looked at it, would I have still bought this stock that didn't do well? Would I have stayed away from it? Would I have not bought a stock that done poorly? And then obviously, would it have given you conviction on names you did buy or didn't buy but thought of buying? How would it have done for you? Would it have helped you make money? It's really that simple. This product is $2,750 a year. So for any of you on the call right now, I'm guessing you don't have to have much success with it for it to pay for itself a number of times over. And the question I would ask you to keep thinking about and coming back to, forgetting about any of what I'm about to show you in terms of how it might help you from a efficiency standpoint, simply look at it and compare how did it do, how did it call names, and how would you have done if you had it on your desk. And this list is a list of names I've been following. A number of them are names that Mark writes about. He puts out a weekly market letter that all of our clients get, and those names every week, there are one or two of them. And if you look at them again and again and again, he was able to suss out names on the bullish and the bearish side that did quite well based on the model and his reading of the analytics. And what we look for when we look for what we call a classic bull or a classic bear is a model that tells us bullish or bearish, combined with, in particular, persistent relative strength and or persistent money flow on the positive or negative side. And when you see prices that rise steadily over time like this in our work, you'll consistently see the power gauge is the same color the whole time, and the relative strength bar has that persistent positive or negative relative strength, and traditionally money flow follows. In this case, there were a lot of dips and pops while it was going up and down, so the money flow wasn't as consistent. I'm just going to look at a couple of other names here to give you a feel for what these pictures look like. And again, where the model went bullish, in this case at a close of $17, and today, a few months later, the stock's at $28. I think even more importantly is probably the downside, is I don't have to tell anybody on this call right now, you need to pick 4 or 5 good winners for every disaster in your portfolio because they fall a whole lot faster and they tend to rise. Lululemon is a name that last year Mark had 3 different calls on when the stock had these big breakdowns. And if you had looked at any time during the year at our screen, what you would have seen is this. You would have seen a huge amount of red ink. And basically, our work says when you see a huge amount of red ink, that's a stock you simply don't want to own. And right here, the latest was another one of Mark's Market Insights is the name of the research paper he puts out every Sunday night. He called this one right before that break. I think it was 2 days before the break, which was right before earnings came out, and that was his bearish stock of the week. And there are quite a few from last year. This is another one. He didn't, or the model, I should say, didn't catch it at the top, but the model did turn bearish right here at 183, and today this is trading around 133. And we see again that consistent, persistent negative relative strength and negative money flow. My guess is this one, even though money flow has gotten stronger, came up a little bit, is going to come right back down because, again, it's got a very bearish power gauge. The financials are poor, the earnings are poor, only the technicals are strong. And when Wall Street has this many negative indicators from that many different angles, our work has shown that the technicals might show you that blip periodically, but more often than not, the stock is going to come back down to earth. I want to show you a couple more of these recent ones. Triple D 3D Systems, again, a high flyer. The model turned bearish at $90. Today it's trading down at $50. LinkedIn, this is one that showed that red ink starting in December, right as we got into this year. Persistent relative strength on the downside. The model turned bearish here early in December. Price was at 226. Stock is trading about 170 now. And again, these are names that if you were looking at them, our work would have just said stay away, whether you looked at it here or here or here or here, whatever month you were looking at it. And I'm going to give you one more that was one of the bigger ones that was in Mark's market letter, was Whole Foods. And that, again, the model picked it up right near the top. And, it doesn't often do that right near the top, but it did in this case. Closed at 65, Today it's trading down at 41, and this one was very solid right after the model turned bearish. Relative strength turned bearish, and money flow has mostly been bearish, and the stock has just been drifting sideways and down for the rest of the year. So that's really what the work is about on an individual stock basis. One other little feature I would show you is we generate, in effect, 5,000 research reports every single night because the model is rerun every single night, and for each stock, we give you a plain English version of what I just went through on that front page, where it actually tells you the Chaikin power gauge rating for Whole Foods is very bearish due to poor financial metrics, and then it'll go through each of those components, the financials, why it's very bearish, financial metrics are poor, low revenue per share, gives you a little bit of data to back up those numbers, which we do not have on the front page. Earnings are neutral, again, some basic earnings data, the technicals, and then finally the expert opinions and a little more data, as well as some competitors in that group. So this report is a PDF, so you can save it, you can print it, you can email it to somebody else. I know some advisors from a compliance perspective actually use it to put in client portfolios when they make buy and sell decisions, just so they have that document that has the backup to why they did something. And I have a few folks that have told me, even though they're not necessarily following the recommendation of the model, they'll simply handwrite on the report and put it in the file. Again, just using it as that process discipline placeholder, so they've always got something in a client portfolio when they make a decision. So again, that's our single stock analysis. Here is what we call our list view, where I've been picking the stocks from. Any list you put into Chaikin, and you can have 500 lists, looks like this. We have here what we call the power bar that tells you how many bullish, neutral, and bearish names are in that list. You start the day you turn the product on with what we call the My Stocks list, and a little more robust, just to give you a better feel for what that power bar looks at. It ranks it from the very bullish down to the very bearish, and if I click on the ranking, I can flip it over. If I'm looking for very bearish names, you can rank it by symbol if you're looking for a particular name and you want to find it, and you can see if any of our trading signals have been triggered. We have half a dozen canned trading signals that you can put up on the chart at any point in time. Click on a single, and it'll pop up again, backtesting in effect historically. These aren't intended to be used for buying and selling. They're intended to be used for, again, conviction on timing, and particularly if you're looking for investing, the relative strength signals in many instances are quite a good point of notation for what might be going on with the stock, as relative strength is probably the most important technical indicator that a lot of investors use today. The little bell here is probably the most important feature we offer in terms of alerting you to what might be going on in your portfolios or your lists. We have bullish and we have bearish alerts that come up every day. What we're going to show you are 2 days worth of alerts. So today's Tuesday. We'll have anything from Monday, yesterday, or previous trading day, Friday, that were triggered. They'll be, and we're looking at the bearish alerts right now. So they might be technical signals like these. They might be stocks that are crossing a price trend alert. It might be a power gauge alert, TRI, the rating turned bearish. And they can also be 2 non-proprietary indicators we can show. One of them would be an earnings surprise if that occurred, and the other would be a change in the consensus estimate. So if any analyst changes their individual estimate and it changes the consensus by 2 pennies or more, that pops up on an alert too. So these alerts, here's one, an estimate revision, was 47, now it's 51, up 8% overnight. The idea of these is that if you're managing multiple portfolios or watching multiple lists, you can very quickly see, are there any things I would have cared about that might cause me to take action, particularly if they're client portfolios. Another feature we have is any list you're looking at, you can run what we call a portfolio health check, which is a combination of a review of that portfolio from the previous week and some forward-thinking data and analytics on how you might think about that portfolio going forward. So for a new portfolio you've never looked at before, again, if you're an advisor looking at a new client portfolio or prospective client portfolio, or if you're a sales trader looking at an institutional portfolio or a focus list, anything you're looking at, it gives you a quick view through the lens of our power gauge. It tells you here the overview, the power bar, how many positive, neutral, and bearish names there are. What happened last week? These are my greatest gainers, my greatest losers, any of the power gauges that turned up or turned down. Earnings surprises from the previous week, there's that Lululemon we were talking about. Estimate revisions that have occurred in the previous week. And for the coming week, any earnings that are due out. We're pretty much done with earnings season right now, so there are none coming. And then the power gauge we looked at during the presentation earlier that will plot names from my portfolio on the actual power grid, indicating to me my strong names in strong groups, and again those weaker names in weak groups I might want to look twice at. If there's a substitute, if there's a name that I have that's a weak name, and there's a similar market cap name in the same industry group, it will, and it's ranked highly, it will give me that as a swap idea. It'll do the same as a whole for industry groups, telling me here are weak groups you might not want to be in, here are strong groups you might want to think about being in. This is also a PDF you can save, email, or print. And finally, it's going to give you a quick review from a price standpoint of what all the names in your portfolio did the previous week, organized by bullish, neutral, and bearish. And as you saw, that simply opens up a tab that I can close if I don't want to save it. So these are user lists, and by the way, for those of you who are advisors, if you clear through any of the major back office or platform firms, the Fidelities, Persians, Schwabs, etc., you can actually get a connection to automatically download all of your client portfolios into Chaikin every single day. Or if you're working for a wirehouse where we don't have a connection, if you're an institutional manager, if you're a sell side, you can use our importer to bring in lists. Anything that's an Excel file or a CSV can be brought in about 30 seconds. In addition to user lists, the two big groups of information you would care about are industry groups and ETFs. We have an interesting view on industry groups because we rank them based on the power gauge. So the oil integrated group is what we would call the strongest group right now. There are 23 bullish names, 5 neutral names, no bearish names. If I scroll down and I look at all the industry groups, what we see is a building up of bearish names and a lessening of bullish names as we get down to groups that are weaker. And over time, obviously, groups change, they get hot, and then they cool off and they drop down. And this gives you a quick look at where they are now. And if you're following them all the time, you will have known where they were, and you get a quick feel for what's moving up and down the list. It's also a great way to be able to, if you own an oil stock and you want to get out of it, click on the oil list, take a look at the names that are here, and it allows you to pick out very quickly some bullish names that you might be interested in. So if you want to swap out of one into another, when we think about saving time, this very quickly, here's oil integrated, this very quickly will populate all of the names and let you look at them through the lens of the Chaikin power gauge and get a feel for what you might care about. And again, now I'm obviously not cherry picking, I'm just picking lists. And again, we can see where in those very bullish names, they went very bullish, in this case at a price of 67. Today it's trading at 83. Persistent money flow, persistent relative strength. This is the kind of stock that our work says you want to own, and the price trend on the way up. So this, by Chaikin's work, is a great name to own. And again, the power bars let you see how many names are in a group, and then importantly, bullish, neutral, and bearish names in that group. ETFs are virtually identical. We start off with the spider sectors and subsectors. The S&P 500 kind of gives you the benchmark in terms of looking at that middle group, and then the stronger groups up here, and the weaker groups like consumer groups right now, consumer discretionary down here. We cover all U.S. exchange-listed ETFs, so you can quote them, and we have the constituents of all U.S. exchange-listed equity ETFs. So when I look at an ETF, I can actually look at its constituents. So I have the spider sectors, I have the spider subsectors, which is a much longer list. So here we're going to have the Morgan Stanley Technology Fund, Keith Bretton Woods Mortgage Finance, S&P funds, there's a couple of Guggenheim funds, whatever those ETFs are in the subsectors, and then by style and sector. So mid-cap growth, mid-cap value, mid-cap blend, and then sectors like the energy sector. So this is not where you probably go to do your initial research into an ETF, but when you've done initial research and then you want to take a look closer and actually see what's in that ETF, clicking on any ETF brings up the constituents in that list, ranked by the power gauge, and then puts up on our chart the actual ETF itself. Now, we don't do power gauge ratings on ETFs because obviously they're a basket of stocks, not individual stocks, but you still get the benefit of having the technical analytics, and the relative strength signals both work for ETFs, and they work quite well. So when you get the buy signals, when you get the sell signals, they're frequently directionally correct. And again, by definition, money flow works exactly the same as it does with equities, and relative strength, again, works just as it does with individual equities, as does the overbought, oversold indicator. So we can still help you, particularly in terms of price movement and direction on ETFs. And finally, for idea generation, the other list I would show you is what we call Chaikin hot lists. And these are some lists we curate to help generate ideas. So large cap bulls, for example, we go through the S&P 500 every week and pull out the most bullish ranked stocks in the S&P. Again, just as a way to show you some of those names that meet our criteria of having the bullish ranking, and then you take a look at the analytics and see if they match as well, and if these are names that might be interesting to get into or do an option play with that week. We do the exact same thing on the bearish side, looking for shorts, looking at puts, and other option strategies. And you can follow what recent bears have done. These are the ones we've had in the list that are now out of the list. And probably the best list to look at to generate ideas from is what we call the all signals list. Again, the technical signals are not, in our opinion, to be used as pure trading signals, but to be used in conjunction with the rest of our work. But what they do is they surface ideas. So for example, we're looking at AREX, I've never heard of it, approach, whatever that stands, resources, I would guess that stands for. And we can see that it triggered relative strength breakout. We can see money flow is very strong, and we can see that just a couple of weeks ago, at the very end of May or early into June, the power gauge went bullish. So this would be an interesting stock to look at on the bullish side. And if we're looking for short ideas, we flip that list over, and we can start looking from the most bearish names. And here's a relative strength breakdown. And a name that recently had a little blip of bullish and mostly neutral for the past year, or bullish, and it just went bearish. And we can see it's about to be oversold. Now, one of the things that will happen as you look at names on Chaikin, a lot of names, and this is one, don't point you in any particular direction hard. You look at it, and it's got some interesting information, but essentially, it doesn't give you anything that's going to determine for you, should I buy or sell the stock? And that's not anything that we worry about. The reality is, like any research, the idea is for it to help you pick winners and pick losers, not to get into or to get out of. And the reality is we don't always do that, and we're not always right. So the question to ask is the reality that says sometimes, a good percentage of the time, we do point you in a very specific direction where the stock is a very bearish stock by the model, and relative strength is poor, and money flow is poor, and in this case we were sending a very strong picture here. This is a stock you don't want to own, and or you might want to short it, which would have worked out quite well. So we don't always give you a clear picture, but we frequently do give you a clear picture. That's step one. Step two is how often are we right? And that's what you've got to determine yourself before you make the investment in time as much as money to use our work. And that's where, in my opinion, one of the beauties of the product that's so unique is the ability to look at virtually every name in your portfolio and just ask yourself that question: how would Chaikin have done for me? Somebody once said to me, it's like the Chaikin challenge. I go back, and before I make that investment in time and money, this person went through a portfolio of over 100 names, they told me, and he said there were dozens of names that would have been beneficial, and in many cases it would have made him quite a bit of money to have had Chaikin when he made or did not make particular investments, and that caused him to pull the trigger and become a customer of ours. And that is what you'll hear me keep emphasizing, this idea that we're not always right, like any research or any model, but we are frequently directionally correct. And the question for you to ask is it frequent enough? And the way to test it is just to go after name and see how we did on your names, the names that you own today that you did or didn't buy last year. Would we, again, have caused you to get into names or out of names that you otherwise wouldn't have been paying attention to? And that is Chaikin Analytics, the ability to pick stocks, the ability to manage lists, do top-down analysis through industry groups or ETFs, or bottom-up, one name at a time, as you look for particular pictures that look good for you or don't look good. And here's the last one I'll pick. Just picking a stock I was looking at the other day and thinking about right here. It closed at 90. I had a webinar like this. In fact, somebody was asking me about this one a few weeks ago. It closed at 90. It's trading today at 65. Soon after, it went bearish. Relative strength got weak, money flow got weak, and you just see this time and time again, where in effect the model is picking up what Wall Street is thinking and doing and giving you that picture very clearly with the model itself and the analytics. So on that note, we're right at the 45-minute mark of the hour that we would like to take, and if any of you have questions, I think Dano is on the line with us, and if you type them in, or if you want to give some symbols, stocks to quote that we could take a look at, that would be fine as well.
Hi, Davis. Thank you for the presentation. Yep. Let's see, a couple stocks here. Why don't you take a look at BPL?
I'm sorry, say it again.
BPL. BPL.
Let's see if this is one that gives us a clear picture or leaves us at a quandary. So the power gauge is very bullish. Oil and gas production pipeline. Financials in the middle. Earnings pretty strong. The expert opinions are what are really strong here. Let's see why. Analyst ratings have all been moving up very strongly. Estimate trends have been moving up, and the relative strength is really strong. The power gauge went bullish back early in February. It was $72 at that point, $79 today, so about 10% run. You'll notice here a quick blip of neutral. One of the things I forgot to mention is we have a technical overlay on the model. The technical overlay says when stocks close, as it did here, below the 200-day moving average, we'll take a bullish stock, and if it closes below the average, we'll turn it to neutral, and it will say neutral with positive potential. And the reason we do that is, again, trying to deal with the reality of Wall Street. Sometimes stocks move up. Technically, they look very strong. The price movement is very strong. Our model is saying bearish. Rather than asking our clients to fight against the trend, if the trend is going against the model, we simply clip the model and call it neutral, which is, again, why that popped up. I just wanted to mention that because that definitely, in our historical back testing and our real and paper portfolios, has definitely helped performance. Without taking much off the upside, it's definitely taken some off the downside. So it's ranked very bullish. The relative strength is a little better than neutral. Money flow is a little weak. So this is one of those names that we're not telling you anything. It's not a really strong sign. It's definitely more positive than negative. We definitely wouldn't be saying stay away from it because the model is very bullish. So the question is simply, how are the technicals going to perform, and do you have enough confidence in whatever you're looking at and the model itself to feel comfortable buying into or staying into the stock?
Thanks. How about DY?
So this one's a little easier, a little clearer. DY is very bearish, and it went there. Let's just take a look at the date a few weeks ago. At $31 on May 15th was the first day we ranked it down to very bearish, not bullish. And if we take a look at the model, the financials and the earnings are both really poor. The expert opinions are really poor. Only the technicals are anything but really poor in our model. Money flow for the past few weeks has been negative, although it's gotten a little bit better lately. And relative strength went from a little better than strong to on the downside. So clearly, this is one that we would say is one you don't want to have in your portfolio. If anything, right now, you want to be buying puts or be short the stock.
Okay, and let's take a look at CR.
So Crane and Company just went neutral literally, it looks like a day or two ago, and that was, again, due to the, I'm guessing it got clipped when it closed below the 200-day moving average yesterday. The model itself says earnings have been really strong, financials have been poor, technicals have been poor, expert opinions have been fairly strong, and I always like to look at which ones have been strong. Analysts, and that's an important indicator, and very little short interest, while the estimate trends have been middling. It says insider activity and the industry's relative strength. So the stock is ranked neutral. The money flow has been very strong. We can see right there on the downturn, money flow got weaker, and by definition, money flow to some extent is an indication of institutional buying or selling. So the same selling pressure that took the stock down a couple of points the last week is that same thing that will cause negative money flow and cause the oversold indication it's probably going to hit down pretty soon. But relative strength is still pretty good, and this stock has been ranked bullish for most of the past few months. So no clear indication up or down, although clearly it's weakened recently.
Okay. Somebody would also like to see KMP.
Now, interesting, that is Mark's stock of the week for this week. I don't know if that somebody was actually looking at, maybe looking at NASDAQ when he put it up there on Monday. This was one that was interesting because it's ranked bullish. The money flow has been very strong for about 6 weeks, except for a little blip right here when the stock came down. Relative strength is not, but this is something that Mark, as an analyst, he's overlaying himself in effect on the model, is saying the model is bullish, and it's been bullish for a few weeks now. But more importantly, money flow is very strong, the price trend is upward, and again, when he puts his personal analyst hat on and looks at the industry and looks at what's going on in the world right now with oil, he sees this as a big winner and picked it on Sunday night as his stock of the week.
Interesting. How about DISCA?
My favorite channel. Got all the good reality shows. Okay, Discovery is looking bearish by the model. Very poor financials. Earnings have been pretty good. Technicals pretty good. The expert opinions are weak. Pretty small short position, but insider activity. The insiders are not buying the stock. The estimate trends have been downward. Relative strength is neutral, and the analyst ratings have actually been strong. Now, just as a point of interest, we talk about apples to apples, and we talk about relative performance. If you look at where the indicator on the slider is, it looks pretty weak. And you might ask yourself why, because a number of these indicators are actually better than average, and you think the average would be right around here. But we're comparing the apples to the apples, so what that tells us is among companies in the media sector in particular, but similar sectors like Discovery Communications, their expert opinions, i.e. their earnings trends have on average been better, there's been better insider buying and so on, which is why as a whole, even though these look like if you were to average them out, you'd see that slider right about in the middle, it's not. and that's because of relative performance and how we look at all the factors relative to similar companies. So back to the stock itself, it's bearish on the model. It's been bearish on the model for a number of months. Relative strength has been very negative. Money flow up until recently with that blip right here with that price rise has been very negative. So this is a stock that clearly I wouldn't want to own right now and looks like it's poised for more of a drop than it's taken over the past week. Very often you'll see that where pretty much everything is negative and or positive, you'll see that drop. You'll see the blip in money flow, and then it'll just keep going after that. That really just held it up a little bit as somebody was getting into a position.
Can you take a look at Wells Fargo, WFC?
Absolutely. It's been another name in the news. This is actually one I bought for my portfolio because we had been following it. It had gone bullish way back here, solidly bullish way back here in mid-February. And what am I looking at? Those are relative strength buy. And right now, the model is very bullish. Both the financials and earnings are almost as strong as they can be. The technicals are a little weaker, and the expert opinions have been quite strong. I think the lack of insider buying is the only patent relative strength to some extent, or the only not very strong expert opinions. But personally, I look at relative strength. There are not a lot of names that have that kind of persistent, strong relative strength that don't do well. And when that's matched up with a very bullish stock, we consistently see very strong price appreciation. And again, I would just mention there's a little blip right here, and that blip, when we do the Chaikin power gauge history, I would mention we do it a week at a time because it would look odd if you did it every day. So when you see a little blip like that, generally we take the gauge from the last day of each week, and that blip will indicate that there was probably one day when it closed at neutral, and very possibly if there was a closing price below that 200-day moving average. So generally this has been a very bullishly ranked stock for quite a while. Relative strength has been very strong. Money flow has been up and down, although strong lately when it hit that last little peak. And you can see overbought, oversold. If you're looking about getting into a name like this, overbought, oversold indicator tells me in a day or two it's probably going to hit down here. And if nothing else changed, I would say that's a great entry point for a stock like this. And that's where I would go, and I would take a look. Probably not today, but I would look at my signals and the overbought signals. You'll see sometimes if you look down, I'm going to click on that to get my little box up, and you can see that right here it hit bottom on the oversold, and that's when it went from a close of 49 that day and went on its way up to what it is today of 51, hitting 52 and change the other day. So very often when we hit these valleys is when the stock will pop, particularly when you're matching it up with money flow and everything else pointing in the right direction.
How about a stock that's not doing so well? Procter & Gamble, PG.
So this one is very bearish, and this is about as bearish as they get by our work. The financials are not quite as bad as poor as they can be. Okay, so here's a really interesting one. Again, I was pointing out the relative performance and relativity on the model. So actually, if you look at these as a whole, it looks like you'd expect that slider to be all the way up here. It's not, because even though it's doing okay individually, other stocks in the consumer product sectors are doing much better. And that's why financially it's ranked so low. And then earnings, technicals, and expert opinions are all awful. I'm guessing there's going to be I'm wrong. There's virtually no short interest in it. I was guessing there was. But everything else, again, in the expert opinions are pretty poor. And then we take a look at money flow. It's been almost consistently weak all the way back into the beginning of the year. The relative strength, back to the idea of that industry group, has been poor since the beginning of the year. So it had a little run-in up here. But essentially, this is the stock you want to stay out of. When our work shows all that red, there are very, very few examples where stocks that look like this have gone like this. I won't say never, because it certainly has happened, but relatively few. We got one more, Dan?
Sure. How about NCS?
N like Mary or N like Nancy?
And like Nancy. Mm-hmm.
Okay, let's see what we close on. We close on one of those stocks that doesn't tell us a whole lot. So here's one that I was referring to earlier, neutral with negative potential. So what that tells us is that it's been closing below the 200-day moving average, and we can see it has. So technically, it's looking poor here, although technically overall, it's been strong. The industry group is a weak one. Financials, earnings, technicals, expert opinions, the whole deal is pretty weak. So it went against its technicals when it moved above the 200-day moving average. I think I said the opposite a minute ago, excuse me. It went against the technicals, which is why it got the neutral rather than the bearish ranking on it. Money flow has been strong, which makes sense because that's what would take the price up from 16 up until a high of 19 a couple of days ago. Relative strength had been poor. It's not quite as bad as it was. And again, we saw that long-term bearish ranking for 4 or 5 months. And then right here, when it started moving above the 200-day moving average, we took it off of bearish and made it neutral. Again, definitely a stock. There would be no reason to get into this stock. I would definitely stay away from it, although I wouldn't have confidence that it was going to, something I'd want to short or buy puts on.
Excellent.
So
would you like to make some closing comments, Davis?
Absolutely.
Okay.
And I'm going to come back over here, and I've got one more slide. I mentioned earlier we get $2,750 a year, and I just want to mention what that means. We mainly are talking about the product we just went through. It also includes a market letter that Mark puts out each Sunday evening. It also includes, we have a technical analyst, Kim Sakalas. She's actually a part of the Market Technicians Association who grades other technical analysts. She puts out a morning note, and for professional subscribers, she's actually available every day to converse by email and on occasion by phone to talk about particular names that you might have questions about from a technical or a Chaikin perspective. When you become a client of Chaikin, we do what we call an onboarding session. We spend 45 minutes to an hour with you to get you up and running as to the basics of, what do I do and how do I do it? How do I build a list or import a list? And understanding, I went through 8 million different features there and starting to get your arms around them. We do have terrific online help that doesn't just teach you what to do, but it talks again through what we look for in a bullish or a bearish stock and how money flow and the signals are calculated. So there's quite a bit of depth and understanding there. The price today is $2,500. We do specials on our webinars for $250 a month. Dan France is manning the phones most days, so if you call this number, or you can email Dan. And let me just tell you, if you want to do a test of Chaikin Analytics, and you call Dan and you tell him you were on this webinar, and you tell him big data, that's our signal for the webinar, he will let you sign you up for 2 weeks, and we'll take you through that onboarding session, and we will show you again one-on-one, if you like, exactly how you might use Chaikin Analytics to go through your names, your portfolio, and again, we want to give you that comfort level before you pull the trigger that this is something that you want to invest your time into, because quite frankly, I think you'd agree, if it works for you, the money is not as important as the time you're going to spend getting up to speed on how to use it and then integrating it into your day-to-day. So Dan knows we had our webinar today and looking forward to speaking to some of you, so give him a call or send him an email that you're interested in doing a trial. He'll get you set up. Or if you are sold and you just want to go for $250 a month to give it a test run, by the way, you can then change it to a yearly subscription and get the same price we're showing you today. So you take your pick on how you want to get started with us. Our bottom line is proof is in the pudding, and if you believe it might help you when you're investing in the way you run your business, we'd love to see you as a customer. So give Dan a call or an email, and I thank you so much for your time and attention today and wish you the best of luck going forward.
Thank you, Davis. Just want to thank everybody for attending Using Chaikin to help find ideas, manage portfolios, and tame big data. Have a nice evening. Take care.